Happy Euro Parity Day, everybody. Well, nearly anyway. Morning, Kay.
Good morning, Ryan. All good, man?
Yeah, good spectator sport this morning, eh?
Yeah, it's holding up, holding up. The defense is there. It's like an ice hockey game, when you go, they're all shouting and like defense, defense, and then you have the guy on the organ playing. It's like a bit of a sports watching.
Yeah, the goalkeeper's getting battered at the moment.
That's true.
Right, this is obviously going to be the big topic today. Again, you'll have to excuse me. I'm in a trade off the big figure down here. 05, got to stop reversing at 99.90 to get out and turn short. So I'm going to have half an eye on the price action as we see it going on now. Not been there's been some bits and pieces of news and stuff out. Overnight, China locked down a whole city over one COVID case. So that's, again, as we've been saying yesterday, another big theme that's still prevalent in terms of China and the virus. Locking down a whole city over one case, it's bonkers. But that's the policy they want to enforce, and that's what they're going to do. I'm not sure if that's half the reason why we're seeing dollar yuan ticking up to 6.75, or it's just this. I don't want to call it incessant dollar bid because it's a bit dollar bid, a bit euro weakness, a bit everything else weakness. But it has kicked on up. The pressure's paid off. Getting above this 71, 72 area. I know Kay mentioned yesterday, and I've been looking at as well. So got a kick on there. I took a bit of profit just below 675 earlier this morning when I woke up. I'm going to see where this one wants to push on to. I'll be looking for a move potentially back up to 678, 79. These highs here, maybe 680. Then we might start looking at whether we're going to get a run up to 7. But as we know, the PBOC like to keep things in control, or China likes to keep things in control. When we got up to these recent highs up here, they started coming out and saying it was some banking and insurance regulator arm of the state came out and said that these moves, i.e. this move that we saw in April, won't be one-way traffic. That potentially seemed to put a top in. So got to keep an eye on what the officials say over there about the price of the currency running. Obviously, their main interest is CNY, the onshore, not CNH, which is the offshore that most of us trade. But it obviously moves hand in hand. So we'll keep an eye on that to see if the currency's going to weaken further and we see this move higher. We've had the meeting between Yellen and Finance Minister Suzuki. A lot of comments out from him. Not really anything different. Watching the moves with a sense of urgency, etc., etc. In the statement that came with this meeting, they both agreed to consult on FX issues and maintain cooperation and blah 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 blah, and stick with commitments to watching FX as per the prior G7 and G20 communiques. But there has been some comments thereafter from officials and from Yellen, pretty much on the intervention side, saying things like intervention isn't necessarily needed or warranted. So the US is drawing a bit of a line and making it clear that intervention has to be a last resort rather than something that Japan would get a green light from them. But as we know from Japan, it's going to take volatile moves, really big moves to get them into this. And at the moment, although we've had the jump up towards 138, it's not been hugely volatile. If it's moving 200-300 pips a day, that's when we get into the territory where they will start to draw a firmer stand in that. But at the moment, running up 100, 150 pips and then doing nothing for a week or so, that's not in the realms of volatility. Plus, remember, we also need to watch out for the speculative lines too from Japan if they start saying that some of these volatile moves are more speculation. Again, that takes them up a rung on the ladder towards intervention. Just before we go into the euro dollar K, what do you make of the comments out of Japan from Yellen and Suzuki?
Yeah, Suzuki was clearly looking for some kind of gentle nod from Yellen, but then this individual statement that Yellen made afterwards does look like they are going to watch what what Japan eventually does, or possibly does. I think it's more eventually than possibly, because it does look like we are going to have this final moon shoot, right? Unless Bank of Japan changes something in their this month's meeting. Yeah, as you say, and as we know, for years and years, I was saying, like when I was still in banks, it was like the last line was that they concluded that the move was speculative, but they're having a hard time to conclude such thing now, since the dollar is stronger versus virtually everything. So yeah, they're going to have a hard time defending an immediate intervention. So I'd still say, for as long as the dollar doesn't change, it's going to be hard for them to come in and intervene on their own. At least an intervention right now would rather give better levels to buyers than comforting the sellers, in my opinion. Well, yeah, that's about it. There's been very little progression. Yellen was really talking about Abe, wanted to talk about the Russian cooperation, and very little about FX, in my opinion. So yeah, we're still at the same point.
Yeah, and I'm getting a bit mindful of this price action we're seeing here, because it is very similar to what we've seen, when we're up at this sort of area around here. And now, obviously, what happens here doesn't exactly mean the same will happen over here. But when you've been trading FX as long as we have, you just tend to see the same patterns. You see where the highs get made, then you see where the secondary resistance comes in after a high is made. It just, price action watching is what I do each and every day. So you want to see, if we started to nick further highs, that suggests we're going to be pushing on higher. But what we could have here is, again, a little bit of a temporary pause. Does open the door for maybe a bit of a pullback. So we're looking at the 137.60s, 50s, 60s really as probably going to be the main resistance, with a sort of bus or line in the sand now at this 137, 70, 75 area. Pullbacks looking at 137, 136.70. Those are your short-term areas to look at. 136.70 is probably my main area to watch just for this phase, particularly if we're going to find support there. That keeps the top side well in play, and just see what the price action does between here and there. If you're looking for a decent dip, you probably want something a bit better than 136.70 because it's so short term. What's your thoughts on this? Just in the short term, Kay, bit of sideways, you think?
Yeah, I was long again after the combination of the PMI and the labor report, and I took the rest of today because I'm always looking at a combination of things. Yes, the yen is getting hammered, and yes, I can't really buy yen right now. But again, this morning we're seeing this the commodities coming off, oils again weaker, and then the yields coming off as well. Stock markets, yeah, well, a bit, but they are rather sideways than really dumping. So I took it off because, again, as we saw for at this first test, the first highs we did earlier in the month or so. Or late last month where we did those fresh highs, something was out of sync, and I'm getting this kind of feeling that something may be out of sync on for yen in particular. So I took it off today, although the dollar is still a monster beat. So I'm not sure. I don't want to go short dollar yen or not dollar yen, but if maybe a cross also might be coming off, as we've seen. Euro yen has been dumping, sterling yen has been dumping. So I'd rather think of it through crosses. If you want, if one, if I want to be long at least yen, I'd rather do it through crosses than through the dollar right here and now, because the dollar is so strong versus everything. But yeah, it looks a tad out of sync again, with what is going on in the asset classes outside of the dollar straight away.
Yeah. So what do you think about CAD yen going into obviously with the mood that the yen is in at the moment, but going into the Bank of Canada? This be one that might be worth a fade on a hawkish BOC if we get a decent rip and it goes against it.
I think it might be for a change. I've always been like reluctant to be long yen. It all depends, right? If how the message will be of the Bank of Canada. If they come out like with a 75 BPs and then go like, oh yeah, we're in a good spot, everything is going well. We are not complaining about anything. CAD yen could really shoot for 110. But if it's like well, if it's 50, some of the market will already be disappointed, and then this might come off back to the 102s or so, 103s, 102s. But if they go 75 and start to caution the hikes and start to be a bit more cautious, this one may be like, yeah, a retest of the highs, and then perhaps stall and come back off a little bit.
Yeah, I think I'm going to keep an eye on this one just for maybe a quick BOC trade. You know, if the yen pairs are all tanking or all dropping, and this one goes against that, it just might be worth a fade. But it'll only be a quick trade, nothing to sit in for.
Yeah, could be worth a fade in yen terms, but then we are very, very close to the triple top in dollar Canada, right? In the 130.80s. That's going to be the big level. So if that breaks through, it's going to probably drag all the rest with it. Yeah, I don't see too much reason for it to break higher, but well, we never know, right?
Yeah, exactly.
Right up there, I've got it as like double or triple top, whatever you want to call it. That's going to be major one. Yeah,
most definitely. Yeah, you can see what it's like at that 130.80. You could probably call it a quadruple top up there.
Yeah.
Big as you like. And I'm still interested in that level. For a potential short, just to try it again, but also for a break reverse, because it is building up, and I like it when a level builds up as strong, particularly around one number. There's not a huge amount of difference in it. We're not talking about highs made by 10-15 pip differences. This is pretty solid into that 30.80, and I love it when it looks like technical perfection, and I'll let you talk about that in a moment, Kay, on the other pair that you smashed to pieces, EuroCAD. But let's get stuck into the euro. So what's going on here? We're here at parity, knocking on the door. For the record, I've got lows of 0.1 on some of the main platform numbers. So we haven't touched the 00 yet. Some people have been claiming we have traded 00, but I'm not seeing that either on my trading platforms or on things like Bloomberg or Reuters. So for me, it's still in play. It does look like we've potentially got some big barrier interest down here, a big defence of the barrier, if there are any down here. Now, this is the sort of thing. This is the sort of level that we used to hear a lot of the PBOC playing what was called DNTs, which are double no touch barriers, if you like. So they would park two barriers, one at either end of a big range, maybe parity and 120, 130, and they would defend each end of it. And when we used to hear of those, if we heard about it before it happened, you could almost bet the farm on them being in and defending it. And I know I've traded a few of those in the past. We don't really hear of them these days. I don't know if they still play them, or if they do, such as the regulations these days, we don't get that information coming out. But this is a huge level. This is one of those really, really big levels. Parity's been talked about for many years over the GFC and the banking crisis. You know, when we came down to the 103s, everyone was crowing about parity. That didn't happen. We're down here again. Everyone's crowing about it again. It's almost wants to become a self-fulfilling prophecy. But it's come through a lot. You know, we've been testing it all morning, and then we got that shocking zoo, which really was, you know, it blew the expectations out the window. You know, minus 34.5 came in at minus 45.8, minus 38.3, minus 53.8. You know, that was huge, and it still couldn't break it, which shows you what happens at these type of big levels. And I want to ask Kay again. You know, you've obviously traded FX and things like this. What happens at these levels in terms of people trying to sell into it and people, you know, defending it and buying off it? You know, how long does the battle rage before one side gives up?
Assuming there's a big barrier, and let's not take into account everything that's going on outside, the reasons why euro is here. Okay. So what usually goes on is that it depends how big the barrier is really, but if it's like the old days PBOC, they would start to buy around 10020, and we wouldn't even go down to 10001. Let's put it that way. So I don't think it's them, although regulations have changed, and so aggressors as well as defenders are now considered as manipulators, although the defenders have a much easier life because they haven't been fined yet, as far as I know, in law, because there's still a case going on right now. But so basically, people who do not want the barrier to be taken out, they will be bidding ahead of the big figure, and those who want to take the barrier out, they will be selling. Now, on every round of successful defense, the sellers will typically buy back a bit because they want to have ammunition again to go and re-attack. So we can see parity 01 trade and then move it back up to 2025, and then the sellers come back in because they've bought back. And for as long as one side or the other, usually the aggressors, they have interest, they are going to make money if the barrier blows, and the defenders are going to make money as long as the barrier holds. That's a simple fact.
And they'll be selling what they're buying into sort of 01 00s as well, won't they? So if it gets to, you know, 10s, 15s, they'll be selling off the buy. So it becomes a bit neutral.
Exactly. So in terms of flows, it's rather going to be neutral for as long as the barrier holds. If the barrier blows, then it depends who needed to use what, right? If you have a barrier which is linked to a $1 billion deal, it might be that the aggressors only use 500 million to make it go through because the defenders weren't strong enough. But then that means that if the barrier blows, the defenders will likely have to sell a billion of something. But the aggressors, they just reap in the money and of the barrier being blown, because there's always a price attached to it, like to any option, and they will only have to buy back 500. And that's why that's why most of the time when a barrier goes, you see this quick move lower, in this time lower in this example, because the holders of the barrier, they have to sell, and they have to sell probably the amount linked to the barrier and what they use to defend. So they likely will be much bigger sellers than the aggressors will be. But if it's linked to in contrary, and we never know if it's linked in contrary to an entry, like for instance, we've seen barriers, especially to the top side in prior years, when I was in banks for Japanese accounts. Bias to the downside were never good news for them. Barriers to the top side were rather good news, because they got triggered into selling dollar-yen. So that means that if you get the barrier out of the way, let's say for instance there's a barrier at 138, once you hit the barrier, it means that they get a signal to sell. And that is where you see those barriers just hit the level, couple of pips through, and then violently swing the other way around. So that a little bit for the context of what barriers could mean and how people who hold them or who are short them in their own books, because a barrier is never located at one bank, but it goes into the market because it's traded, and you also have one side and the other side for every option that you do, yeah, if the barrier triggers a loss of security, let's put it that way, loss of safety, then you're going to see an acceleration in the direction of where we came from. If it's like a trigger to do something on the other side, then you usually see just a couple of pips through and then a violent move to the other side.
Yeah. So we're at the moment we're playing that usual game, and I'll let Kay again explain. I'm seeing a 00 low on one of the main newswires and an 01 low on another. Now, what's the qualification for a barrier to get knocked out, Kay?
Okay, unless the rules have changed, first of all, there is no regulatory rule for a barrier to be done, at least not until 5-6 years ago. It may be different right now, but I have to check it out. But the rule was, and EBS, the EBS platform was taken as a benchmark, at least for the major currencies like euro, dollar, yen, and stuff like that. It has to trade in a regular amount, and it has to trade at least 4 or 5 times. It used to be 3, but then they put it at 5, I think. And it has to trade regular amount. Regular amount is more than 50, or it could be 100 million units right now. So it has to trade figure for at least 100 million euros, and it has to trade more than once, 4 or 5 times. I don't exactly know what it is exactly right now, but it has to fulfill certain rules. So it's not possible that one bank would go, I'm 99 offered in $300, but there's only one trade. The barrier would still hold. The people owning the barrier would still have a case of saying, like, the barrier is not triggered because there's only been one trade.
Yeah.
So it's a bit complicated, and there's a bit of stuff. There's a lot of stuff that went down between 11, 12, and 2015, 16, and still ongoing, as I said, because I think there's a case for against one of the major banks where they actually were defending it, but the law is calling aggressors manipulators, but the defenders, they haven't qualified them yet, if I'm correct. So it's still, I think today it's a bit easier for the defenders to defend the barrier than for aggressors to get it out of the way.
Yeah. I guess, for some of the traders here who may not know what barriers are, these are option plays that are put into the market, and they only pay out on expiry if the price is above the strike level they're set at. And as cases, if they're traded through, they get knocked out, expired, worthless, you lose your premium. And if they're big enough, they will get defended. But it's finite, because you're not going to spend more trying to defend the barrier than you will what the barrier is worth, which is why, as we mentioned, if someone's defending these barriers at 00, they're buying at 0, 1, 2, 3, 4, they're going to be selling that out higher up, 8, 9, 10, 11, 12, to give themselves that ammo. But for me, when you trade when I trade these big barriers, and I love these big ones because it's fascinating to watch the battle. We've been seeing it all this morning. You want to see the clock, watch the clock, because this isn't going to happen forever. Either it's going to get smashed. So let's go through it. There's going to be 3 things that happen here. Either the level's defended, sellers give up, and we see a decent bounce, wherever that may be, depending on how big a tail they throw in. We could bounce all the way back to 1.01. If we don't hold and it breaks, we either bust through the barriers, triple load of stops, and probably for a level like this, we probably would get down to somewhere like 80, 70, maybe even 60 because it is such a big level. So 99, 60s. And then we get the bounce and it rips all the way back up. And again, we get up to near 101 or something like that. Or it's a proper break. And it's all the sellers who have been selling this consistently for days. If they knock this out and can hold below it, then we're heading much lower. And we're probably going to be through 99 and more fairly quickly. So that's the three scenarios. Yeah.
Ryan, perhaps you can put your chart up while you're
talking. Yeah, sorry. Yeah, let's check it out.
On the news page.
Yeah, keep an eye on it while we're doing it. So I'll put on the a wider chart. So yeah, there's three ways this can happen, and that's important to know because you can sit here and guess. You can be long a trade like me and wondering what's going to happen, what it will do. It doesn't really matter. There's only really three things that can happen. Okay, it holds, it breaks and fakes, or it goes properly and we put it in the rear view mirror, as Kay likes to say. So how we trade that is up to you. I like to tap these big levels, these big figures when we trade them for the first time in a long time. So I'm long into this one, 05 and change. I took some off at 16, half the trade just to put some in the bank, lower my risk. I've got to stop at 99.90, and I'm also going to reverse into a short if that breaks at the same level. So for trading it, it doesn't matter what I think. Doesn't matter what these folks are doing, defending it, buying, selling, do what they like. I've got my trade in. I've got to know my risk. I know where I'm going to be wrong, and the rest is down to what the market wants to do with it. But you shouldn't ignore these big levels. They are huge. You know, we've been trading this all morning now, and what's the time? We're nearly 11 o'clock, and the clock does come into it, in my opinion, because at some point someone's going to run out of patience, and they're either going to smack it or they're going to get out of town, and that's when we'll see either a break or a bounce, because you can't have this battle going on too long without something happening one way or another. In my experience, it just doesn't happen. If we're still knocking around this into the close later today, it will probably be an exception, not a rule. So how do we trade it from here? Well, if we do get a break, you know, I've got a level just coming off some of the old lows that we saw previously back to 2015, just a trend line there. It's a two touch. That's coming in, you know, down around that 99, 60-ish area, 70-ish area. So for the technicals, that's the sort of area we're looking at. Maybe we see the price pull up on a stop run through. But I'm not going to be betting the farm on the techs down here, because if this is a proper break, as I say, and Kay's mentioned it, you know, we could be down at 99, maybe through 99 pretty quickly if the sellers really want to grab this by the horns and push it. But on the flip side, you know, where could we go if we do bounce? If this does see a strong bounce and we see a lot of shorts, you know, particularly from these breaking levels all the way down here, you know, 101.80. If the sellers want to throw in a towel and these shorts start getting a bit panicky that they're not going to get through parity, we could get a really, really sharp reversal, and we could be up to 103.40 again pretty quickly. That'll be my area of where any towel throwing gets tested. Is that where sellers are going to step in and come back in and say, okay, you've won this round longs, but we're still in the game and we're going to come in again here. Kay, do you want to take your chart for this? Because I know you got a bit more downside levels in euro dollar.
Yeah, sure.
Let me get onto that.
All right.
Yeah, and here we are bouncing to 13 at the moment, 13, 14.
Yeah, it's bouncing a little bit. Okay, yeah. No, I'm not even wide enough. Yeah, so, okay, the first thing I have here is that little downtrend on the euro, but that was broken yesterday around 100, that 100.7080 where we were holding before, which is like a bit of an extension. That trend line came in, but then when we move onto the daily, we have a little bit of room here left, which is today around 99.6070. But then the one I'm really watching is this 99. Yeah, it's roughly there, a 2002 level from where we started to jump massively higher. So that's really 99 the figure. As I was saying earlier, I think if we get down there, the battle for parity is likely over, and then we have to look at other stuff. So if we get a confirmation down here, then it's really bad news for the euro, and we could go quite a bit lower. I think there's a lot of people looking at harmonics and waves who think that the finality of the big down move in euro lies around 90 or just around there. But let's take it one day at a time, because for now parity is holding. So we are not down to 99 yet, but 99 to me is the big level. Shall I show a couple of other things while I'm on it?
Yeah. I was hoping you're going to look at the Euro CAD, and the big point in all this, while Kay's knocking the charts up, is that these levels, they all act the same. Okay. If you're trading, you see this stuff, and if you follow price action, this is why I'm big on telling people to follow the price action. You see the same thing going on level after level after level, especially in these big levels. Look at Euro CAD here. That's effectively like euro at parity here. Big strong level, get a break, it smashes through. But sorry, Kate, you crack on, mate.
Yeah. So this was textbook breakdown. Come back, retest it, even get like slightly above. I had my stop around 134.25, then even brought it down at one stage to 134.15. But then we had the final move. I did take it back along this line because I wasn't sure how the economic data were going to come out end of last week. So, all right, I've missed probably 100 points, but then I took the bulk of the move lower. So I'm pretty happy about this trade. Now we are coming here into what I think is pretty decent support. It is a low. We're going back to 2013. This is like just under 130 the figure. This is like 133.25. This is 130.25. And we are here. I think we are in the next big zone. I was saying like 134 opens the door to 130. Well, here we are. And right now we have to see what is really going on, and likely have to wait for what's happening tomorrow on the Bank of Canada. I'm not going to take any positions here. I'm also keeping an eye on oils, which are trying to come back a little bit. Again, keeping an eye on gas, which is also one of Canadian exports, and so for the time being neutral and wait for what happens tomorrow. If it breaks under 129.75, we could be quite quickly at 127 in my opinion. But equally, if euro starts to make a feast of it, and we get a little bit of a disappointing Bank of Canada tomorrow, it's not going to take much to disappoint the market in my opinion, by the way. We could see it easily back up above 131. Why not even mid 132s before reassessing? But this zone will be one to keep in mind as well if ever we start to go the other way around, because a break back above is going to be opening the door to whatever room you want to imagine in the next 10, 15 big figures really. So we have to really keep this level in mind for the medium term as well.
Just before you move on, okay, yeah. I just want to make an important point in, a bit of a lesson, okay? You guys and girls, you see us do analysis, you see whoever you watch do analysis, and Kay obviously flagged this one up weeks ago, okay, this Euro CAD. He had what the level was as a support. He thought it might get to 130 if it breaks. Okay, that's all well and good, and I don't mean this dismissively. That's all well and good. Everyone can point those levels out, but what people don't get into, what a lot of you guys who do analysis don't see, is what happens when you're trading it. When you're in a trade, and the price is moving, and you have to assess what happens then. It's okay looking back now and saying, yeah, it hit 130. But as Kay mentioned, he hasn't got out at 130. He got out at 131s, and that's because when you're in a trade, putting a trade on is the easy part if you've done analysis. Staying in the trade and what you do with the trade is the hard part. And that's very hard to teach. What goes through your mind when you're in a trade? Is this the bottom? Should I take off at 131 like Kay did because of XYZ reason? And that's what we do in our chat room, in our platform. This is why we have the trading room. This is why the analysis that everyone does in our chat room is not hindsight stuff. It's as we trade stuff. Because then you can't teach. It's hard to teach that feeling of what goes through someone's head when they're in a trade. It's not just about, we said if it broke 134, it's going to get to 130. You know, anyone can do a chart of that. But if you follow us in the chat room and those who are in the chat room, you will see Kate saying, well, I'm taking some off here because of X, Y, Z. This is what I feel at the time. It's not just 134 is broke, I'm not doing anything till 130. And that is probably one of the most important things we try and teach people in our chat room on our platform, because that's the stuff that no one else talks about. Not get into trade, what you do when you're in a trade. So I just wanted to point that out.
Okay. Right. Let's look at let's look at the usual ones. Yeah, gold still not looking really perky, but we bounced off the 1722, which is this low here as well from September 2021, which is the low from April 2021. We have been through here on a spike. We have been through here on spikes, but this is starting to look like a half decent level to me. Of course, gateway to 16, 70, 80 if it ever breaks. But will it break? It's an interesting question right here and now. So I respect the 1722 as well as the smaller one, because it's our last week's end of last week's retracement top around 1752. But to me, really, it needs to get back above 1775 to get neutral and perhaps saying that we have turned a corner here. Bit similar on silver, which is really approaching relatively fast to the 55-70 support zone. The market is not extremely happy about growth these days, even though the data in the States are holding up pretty well. But since it's an industrial metal, together with dollar strength, this is looking to being in for a test. I bought just a tiny bit this morning around 19, just in case we wouldn't get there, and I'm leaving a couple of other bits in this zone because I do want to give it a try, especially if economic data would not completely fall out of bed, in which case we could see a test and then start to bounce again. But everything I'm building right now, I have to say, everything I'm building right now is not near where full positions are. I'm really going in tinies, which are not hurtful for my account, and these are tests, and this is really if I get the test, and then we start to bounce, and then we start to go back above, call it 20 or something like that, then I'm going to feel more comfortable and saying, okay, we're holding this channel, we have a chance to get or an opportunity or a possibility, let's put it that way, to get back to this level. But right here, it's still very dangerous in my opinion. So I'm doing like very, very small amounts, which are not hurtful for the account. These are really chips that I'm tests that I'm putting there to see if we hold this channel, because the dollar may just not be done yet. Then moving over to yeah, you showed the dollar Canada already. It's really a big level up there. Dollar makes a bit of an interesting level here as well, around 2090, 92. It's broken through this channel, so I'm quite wary of going short here, especially with the dollar and the way that the emerging markets have behaved of late. They are not doing great, but it could be a resistance level here. The next one is just above 21. I I still, well, I'm still long max versus euro in smaller amounts, and I'm waiting for retracements to add to it. But the dollar max, it could be enough here. Don't forget, it's still a very high yielder. I haven't seen anything dramatic coming out for Mexico either lately. That could really make the max start to turn around and go massively weaker, apart from being a dollar move. So it's a real high yielder, and that brings us to my euro mix, which is it held of this prior level. Yeah, we tried to break below, back above, but we haven't even started to test really retracement levels. 2099, 2101 might be the first one. I wouldn't consider it a bigger one, a big one. This one may be a bit more interesting around 2110, but I'm still looking at anywhere between really 2120 and 2135 ish to really add up there. I might give it a little of an add-on here, but I'm really waiting for these levels. I still think euro is not done with its problems, unless we get really good news. That's something I wanted to say though. We had these Canadian the Canadians freeing up the famous what is it, pump or thing for the Nord Stream 1 gas pipe. We haven't heard from the Russians yet to see if they are really going to restart the Nord Stream gas pipe on the 21st or the 22nd. We heard something about Gazprom saying that they will doing it throttle-wise, so probably restarting, but not really full steam at the start. But we haven't heard anything in reaction to what the Canadians said, that they liberating this this pump or this thing for the gas pipe. So it's going to be interesting. If ever we get really good news there, we have to be a little bit careful for euro crosses as a whole, because euro could really benefit from it greatly, at least in the short term. We could see like really snaps higher in the euro, because it's a big issue right now, this energy stuff in Europe. We just cannot forget about it. But in the meantime, yield differentials, euro a little bit under the cosh still, and Mexico being a part of the American continent, I'm rather still on the short side of this euro mix, but lesser position right now. Aussie, yeah, Aussie, but Aussie had its break yesterday of this 67.60-ish level. Let me put it in a shorter time frame.
Yeah, it looks like we're heading for the 61.8, doesn't it?
It does look ready for it, but we also went below it. This is a kind of a fragile one, I must say, which came in around the same level of the 67.60. So we had a bit of a double whammy there for the Aussie on the breaking side. We didn't make it back above this 67.50-60 yet, so we have to have a retest. If ever we start to get above again, then we may go back into the 68s. But in the meantime, I rather prefer myself. I'm staying out of it. I with success, I bought it once, twice before, and then sold it on the way up, and then I bought it a third time, and then I got taken out for 15, 17 pips or so. So that's all like very manageable. Yeah, for the time being, I'm not doing much. If we would get a retest of the 50-60 and cap it again, we could be on our way to a bit lower, right?
Yeah, Kiwi's also, that's having a big old bust down.
Yeah, Kiwi as well, and Kiwi was actually a pretty violent one, because we had the break of the 62 level, took us into the when we broke the 62, we had this move, quite quick move down to 61.5, but then it snapped back equally to 62.5 before we had the real break. And now we are rather in this downwards pattern, which could lead us all the way to 60.5. Why not? On the
And that's with the RBNZ tomorrow morning.
And we have the RBNZ coming up, absolutely. So if ever RBNZ would disappoint, market is expecting for them to go, what is it, 50 again? Or
50, yeah.
Yeah, 50 again. Yeah, in current contexts, it may give us a move back to 62, but be very careful what happens around 62, because if it disappoints, we may as well be relatively quickly down to mid to low 60s. So watch out how the dollar is behaving in the meantime. And with that, I'll give it back to you, Ryan. The only thing I wanted to add on your China is that I've seen, so there's still those regional bank problems going on. There was this article coming out overnight in Reuters saying that China's rural bank scandal has a $300 billion equivalent potential tail risk. So I think that played against the Chinese yuan as well overnight, together with the fact that PBOC was still telling people that they would, or the economic minister was still telling that they would support the economy. So I think that as well helped the dollar yuan lower again.
Yeah.
Back to you, my friend.
Okay, mate. Let's grab them back. Bingo, bango. Yeah, so I was saying I'm keeping half an eye on euro dollar, just knocked a slice off my longs from 05 at 21. I'm not going to be slow in putting money in the bank on this one. If I can get my risk down a bit, if we get it back above sort of 30s area, then I'll look to start maybe bringing the stop up and see where we get. But really, for euro dollar on the bounce, it's just watching to see what the market wants to do. You know, we've probably got some small steps. You know, looking at this 1000 35 40ish is a step, then up again here 55 60 is another small step. These are the small levels I watch on a 15-minute chart, just to see, you know, what the bounce is like at the moment. If we can't sort of get above 30s, it's going to keep the pressure well on. So for me, it's just about what the price action does from here, as to whether we're going to move away from this parity level. Let us know if you've got any other pairs or markets you want to look at quickly while we're waffling on.
I see.
If cable's looking interesting. When isn't cable looking interesting? It's still a mess for me. Cable is just completely keeps getting battered. At some point, it's going to bounce. Where that is, I don't know. It's just in any which way there is a way to kick cable, it's being kicked. For me, it's going to be about the 120 area. If we get back up to there and hold below, if it becomes solid resistance, that's going to keep the bearish pressure on. So really, you know, we've had these little moves back above, but you know what I want to see is another move up here, confirmation. You know, not getting above 120. That will really solidify things from here. But as for the downside, it's lick your finger and stick it in the wind at the moment. But you look on the other side, and euro sterling, you know, again, it's indicative of whether this move that we're seeing in the majors is dollar led, euro led, pound led. Now, obviously, a lot of this has been euro weakness rather than pound strength. It's probably the only pair that's seen a bit of pound strength, but mainly coming because the euro's been selling off. But here we are testing parity, and you know we're not doing an awful lot in euro sterling. So again, it tells me that A, the pound isn't quite ready to bounce, and B, the euro isn't quite ready to bounce yet. And it's going to keep going. And it's these crosses, like Kay mentioned earlier, it's the crosses that can give you a sense of which wind is blowing where. There's always two sides to a currency pair. Just because you look around and euro dollar's off, cable's off, dollar CAD's higher, Aussie dollar's higher, doesn't necessarily mean it's completely US dollar buying. That's the main theme. It can be weakness in the other currencies. That's the theme, which naturally translates into dollar buying, because I see a lot of people, when I come in the morning, I look at the headlines and the commentary, and it's dollars done this and dollars done that, and some people tend to think that the dollar is the only currency in the world, but it's not often the case. It can just be a coincidence of the fact of something else is moving against the dollar. But as Kay mentioned, we're in this theme where yields are all looking in the red. So US 10s were sailing happily above 3% after the NFP, and here we are back again, not looking so rosy. And this is just the noise that you get between the geopolitical events coming in, what's going on with energy and Russia matching off against the central banks. It's just part and parcel of markets, and this volatility is what we like to trade. Now, as Kay mentioned, stocks, again, still going a bit sideways for me, which is quite surprising. Maybe there's a bit of pause here because we're going to start getting into these earnings details this week in the US. But if we don't see much move in the main indices as we get through this, whatever the news is, whether it's good or bad, to me, again, it's not good. It's going to say that stocks particularly are not really taking a side. They're not. They've had their maybe recession trading, and now they're in the what next phase, or the what now phase. What's going to happen now? Is the Fed going to continue, and what is the economy going to do? Are we really going to see a soft landing or a hard landing? And I think once we get into that, then perhaps we're going to see a move in stocks. But for here, I know people in our room are trading it either side. Sell the rips, buy the dips. And it's working out well. So if you're a scalper, this is what you want to see. Now, unless you guys and girls have got anything else in particular, we shall call that a day. As always, please give us your thoughts and ideas in the chat here. We don't want to hear our voices all the time. We want to hear what you guys want to say, what ideas you're looking at, and what you want to talk about. Because we can give our view, but this is about you guys and girls, and we want to get your feedback. Know what's going through your minds. If you have any questions on anything to do with trading, psychology, positioning, anything you want, this is what we're here for. This is what the show wants to be. Other than that, I'm going to get back to gluing my eyes to euro dollar. I hope you guys and girls trade safely, make loads of pips. Thank you very much to K-Man as always, and we shall see you bright and breezy tomorrow.
Have a good day, everybody.